Today. That may just be because of the weaker dollar, but it also could indicate there is still some hedging going on against any kind of election uncertainty. And you're actually seeing that uncertainty and that fear about.
I'm placing a new order to sell short Swiss franc at 0.91.5. Okay. Okay. Yep, order placed.
Kelly Lights, thank you. Elevated volatility and persistently elevated volatility over the last several months has been a key feature of this market worldwide. Going into the opening bow, 25 minutes away, equities do advance up 39. We advance a little more than 1%. Henrietta Trays of Vader Partners seeing less potential for another surprising Trump victory. She goes on to say the following. In 2016, President Trump won the election in a very different environment than the one he faces today. When he has high turnout at this rate, the chips don't have an opportunity to fall in Trump's favor in the same way they did in 2016. He has not attracted new voters to his fold. Henrietta, I'm pleased to say, joins us now. Henrietta, fantastic to have you with us on election day. Thank you for your time. Let's start there. The high voter turnout that we've already seen over the last month in this country. So many people say it's all about turnout, but they've failed to tell us what this turnout actually means, Henrietta. What's your read?
I've been reading through the numbers this morning with the latest polling data, and what it looks like to me, based on what we've seen in this massive surge of early voting, is that one of the biggest surprises that 30% of the voters are new voters. 36% of that group is unmarried women. And that is a group, along with the younger demographic, that skews dramatically in favor of the Democratic conference. You can't say for certain because we don't know how these people have voted, obviously, and a lot of them are classifying as independents. But if you run with a 52%, just a bare minimum average of independent voters trending into the Democratic space and supporting Biden over Trump, you are looking at the early returns suggesting a very strong showing for Biden in Arizona. Very strong for Biden in North Carolina. So much showing in Nevada that local prognosticators there feel comfortable having already speculated that the race will be won by Joe Biden as of yesterday morning. And weaker than expected showing in Pennsylvania. Florida is very much on the cusp, but the early voting suggests that there is a dramatic increase in younger voters, first-time voters, and those under 29, which skew sometimes 26 points in Joe Biden's favor. So the data sets that we've gotten so far are obviously, we are going to have maybe 60 million people still to vote, and we don't know exactly how those voters turned out, but right now it looks very strong for Joe Biden, which is very consistent with what we've seen for the last year.
Henrietta, talk to me about momentum. A key feature of the 2016 race going into the final week was a real pickup in momentum for President Donald Trump. I wonder if you're seeing any of that anywhere, not just at the state level in battlegrounds, but also in key demographics, the over 65s, suburban women, etc. Do you see any momentum anywhere, Henrietta?
What's so interesting about that is that there's been something going around the street suggesting that October 31st data from 2016 is somehow comparable to October 31st data in 2020. And there could be this dramatic shift and surprise for Trump in the polls in the last 8 or 9 days of the election. What that fails to capture is that the Comey letter came out on the 28th. Dramatically shifted voter opinion. There were 12.5% of voters that were undecided and broke late to Trump. And the difference between 2016 and 2020 is that the election's on November 3rd, not in the following week as it was in 2016. So there's less time. Too many votes have already factored in, and we did not see a material move for Donald Trump in the polls in the late-breaking way, the way it did in 2016. So this idea of tremendous uncertainty, I think, is manufactured in part by the Trump campaign itself, trying to remind voters of how successful it was unexpectedly in 2016. But that same environment has not repeated itself this year.
So, Henrietta, you've got your base case, you've got your forecast. Now let's talk about the process through the night as things develop. What are you looking for that will validate your forecast or lead you to question it?
Well, I want to see Nevada. That was a very big deal in 2016. I do think that will swing in Biden's favor. So that gives me some comfort that there's not a polling surprise to come. North Carolina is going to start reporting out its findings at 7:30. as are a couple of other states. And I anticipate that we could have a conclusion here before too late in the evening. A lot of races, and the big ones, were called around 10:30 in 2016. And given the sheer volume of early voting and the potential for a lot of these states to have started counting already, including in Arizona, including in Florida, you could have some real data to run with just based off of that early voting. There will be a bit of a tide. It could come in strong for Biden early, and then as the hours go by, trend in the President Trump's favor, because the in-person voting right now has to be heavily Republican because they are lagging so substantially behind Democrats at this point. So there will be a bit of a tide throughout the evening. But as Kevin was mentioning before, Wisconsin anticipates having all of its reporting in by 6 a.m. tomorrow. So we should have a good idea. I don't buy into the narrative that this is going to be particularly contested.
Henrietta, great to catch up with you. Appreciate that perspective. Henrietta Trey's there, weighing in on the situation for the election through the next 24 hours. And contrary to some of the fears out there, believing that we will have a result before Wednesday morning. Let's get to the price action. Equities up 40 points on the S&P 500. We advanced 1.2% at the market desk with your movers. Here's Abigail.
John, well, with the second day of a rebound rally for stocks and the Dow and the S&P 500 outperforming the Nasdaq, not surprisingly, we do have the cyclical tilt that you have been alluding to. Now, that means that we have energy up top. Well, yesterday up top, up about 3.7% on the day. Yesterday, the best sector. Today, we once again have the oil majors sharply higher, in sympathy with oil, up about 3.3%. The banks are doing well, as they did yesterday. Today, Bank of America, as an example, up 1.9% in sympathy today. This was not the case yesterday. Yields are rising as bonds sell off. And then there's tech. Overall, tech is underperforming, and really standing out is Alibaba, really getting clobbered. This, of course, after Ant Group has suspended its Hong Kong and Shanghai IPOs on regulatory issues. Jack Ma's empire struggling this morning, John.
Abigail, thank you. Appreciate it. Thank you very much. Going into the opening bow, equities advancing. I show you a poll, and you all say, I don't buy it. It's a market conditioned by 2016, refusing to believe what's in the numbers. That conversation coming up next with Troy Gayeski of Skybridge from London and New York this morning. Good morning. This is Bloomberg.
Short position opened at 0.915. At short position on Swiss franc.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan. We did see some pressure on the futures. That is now being reversed.
We're looking at an election that favors a Democratic sweep.
What's really also priced in is the Biden trade, right? The blue wave.
But it's definitely not fully convincing and conclusive.
If it goes wrong, you could get a huge sell-off.
We're wary at the moment in markets.
The margins have been narrowing somewhat.
A lot of people were caught very flat-footed in 2016.
Definitely what we've learned is not to count Trump out.
The scars of 2016 still deep. The national poll showing former Vice President Joe Biden holding a strong advantage, but markets pricing in a much closer outcome. Bloomberg's Scarlett Fu joins us now for more. Hey, Scarlett.
Hi, John. Yeah, you're absolutely right. We make the distinction because 2016 was such a shocker, defying most of the polls out there. Now, President Trump may be trailing in most polls, but he can take some comfort from certain polls. Bloomberg Opinion's John Authors included a couple of charts in his column this morning. You have database models, which include aggregates of different polls out there. So according to, say, 538 and the Economist models, Biden's odds of winning are at least 90%. You also have market-based models where people wager real money to buy futures or place spread bets tied to the outcome. And in the predicted model, you can see that Biden still prevails, but his odds drop to about 2 and 3. Real Clear Politics aggregates the spread betting models. And once again, in that situation, Joe Biden is leading, but by the same margin, around 2 out of 3 odds. Now, the bottom line here is that database models reflect what people say, or at least what they tell pollsters, while market-based models reflect where people actually put their money. So the question really becomes, do the markets, which reflect higher odds of a Trump victory, see something that polls and modelers don't? The problem is the sample size in election prediction markets is fairly small. These are not deep and liquid markets like traditional financial markets are. You also can't read the intent behind a specific wager, which could be a hedge rather than a directional bet. And of course, complicating all of this, John, is that you had a surge in early voting this year, either in person or by mail. Some 100 million people have already cast their ballots. So to get a read on what's been happening and what's going to happen is very difficult. John?
Scarlett, great to catch up. As always, Scarlett Fu on this market, on the consensus going into another election. 4 years ago, what was amazing about that specific time wasn't just about the outcome. The outcome was unexpected. It was the outcome of the outcome. What a Donald Trump presidency would mean for this market. How many people lined up on programs like this saying equities would crash? And then they didn't. And one question that I asked earlier today, and I think it's a really important question to ask yourself today as we all sit here and speculate what all these different permutations mean. If I told you 4 years ago what the result of that election would be 24 hours later, would you have put on the right trade? I've asked that question a few times this morning, and so many people have got in touch with me and just said no. So think about that this morning. 14 minutes out from the opening bell, futures up 38. We advance 1%. Skybridge's Troy Gajewski weighing in on the market's potential reaction to the election. He says the following: the question now is whether we get the blue wave and massive fiscal stimulus early next year, followed by higher taxes, as well as a re-regulatory agenda. In the near term, election outcome certainty and stimulus trump longer-term policy changes. Troy joins us right now. Troy, let's start with that question 4 years ago. If I gave you the result, would you have got the trade right?
Well, not in the first 2 or 3 days. You know, we were certainly in the camp that if Trump won, you would have a sell-off that lasted several days, and instead it lasted, you know, basically shortly for 4 hours in overnight futures. And then markets very rapidly started to price in a pro-growth agenda, you know, steeper yield curve, deregulation. You know, the banks really ripped after that, as well as energy. So we would have gotten it right, but we would have been a couple days late, right? And so we took our time to analyze, you know, what the policies meant, and that's when we started to ramp up our bank credit exposure at the time, because it was so much more of a favorable environment, not only in terms of higher interest rates, but also a steeper yield curve and clearly a deregulatory agenda, which particularly benefited banks and bank credit at that time.
So, Troy, let's talk about lessons learned and whether they're lessons you would apply to the next 24, 48 hours.
Yeah, so look, I think the bottom line is the probability of a Biden win is materially higher than the probability of a Clinton win. At that point, it was 3 and 4. You know, so Trump had a 1 in 4 chance roughly, which basically tracked what Nate Silver was predicting. And the odds markets were a little bit higher probability for Trump at the time, around 40%. You know, this time around, it's just a harder lift, as your previous guest articulated. You know, there's been so much early voting. You know, Trump doesn't have as much time to close the gap. You know, in most of the swing states, he's trailing by higher margins. And people forget it's just really hard for a Republican to win. You have to win Florida, North Carolina. You have to run up the score in Ohio to have any chance in Pennsylvania. And if you don't win Pennsylvania, very hard to see how you win Michigan. So, you know, the odds are we see a blue wave. You know, the Senate's 50-50 or maybe 49-51. And that in turn will lead to significant fiscal policy stimulus, which, you know, it's a shame we haven't gotten so far. And from our perspective, markets have been pricing this in the past 3 weeks. I mean, you look at large cap tech, which peaked in early September. You know, banks had been getting clobbered for quite some time. They've come back. Cyclicals have come back. You've seen a steeper yield curve. And really the last straw today is the dollar getting trashed, because that's been the expectation for quite some time, with even larger deficits being run and more stimulus in the near term. You know, the dollar has been hanging in there relatively well given the resurgence of the pandemic, but you see the dollar finally getting hit pretty hard today.
See that more pronounced today and yesterday in the equity market. Big tech underperforming, that cyclical rotation, the curve steeper, yields higher. Talking about the dollar this morning, weaker against pretty much everything in G10, everything on top of the US dollar, with the exception of maybe the Turkish lira over the last couple of days. We can talk about that later. Troy, my question to you, sir, is that I can sit here and construct a bullish narrative on a blue wave. I can sit here and construct a bearish narrative on a blue wave. How difficult is it to understand how that consensus will develop in the coming days, if indeed that is even the result?
Oh, yeah, no, it's certainly very challenging. I mean, not only lining up the outcomes, but also the timing. You know, from our perspective, in the nearer term, as we said, the additional stimulus plus the certainty of outcome, meaning there's not going to be a contested election, right? Because that's a very big risk factor now, that the race is tight enough and Pennsylvania turns into an absolute mess, and that could lead to a more material risk off. But barring that outcome, you know, if you get the blue wave, in the shorter term, meaning the next several months, even into February and March, we should have a meaningful trade up in all risk assets. Dollar should weaken, curve should continue to steepen. We may or may not see further sector rotation because of the fact we've already seen quite a large amount of that so far. And then at that point, you know, markets are going to have to digest, okay, corporate taxes are going up, we know that, but when is it going to be? Is it going to be Q2 of next year, or is it going to be Q4 of next year? You know, we think that just like the Obama administration held off on raising taxes for several years to get the economy back on its feet, that prudence will prevail and the party will delay that. And then obviously you have the re-regulatory agenda, which will be very painful for certain sectors like, you know, oil and gas, but on the broader economy should not be as destructive as many people fear.
Well, let's talk about the broader economy away from the politics and trying to gain what's going to happen in the next 48 hours and trying to gain what it actually means. My colleague Mark Cudmore, running for Bloomberg today, just about how important the trend was going into 2017 for the global economy. That synchronized global growth didn't come from just the US election. It was much more than that. And Troy, this morning, we caught up Chris Verone of Strategas, who was talking about a similar thing. Stick with what's working. Stick with the trend. That's the story here. Troy, does that speak to you? Stick with what's working.
Well, look, again, what worked earlier in the year coming out of the pandemic was mainly large cap tech, and that's lagged recently. However, over the longer term, you know, technology and healthcare in particular are sectors that have tremendous growth, so we don't know why people wouldn't want to have some exposure there. You certainly don't rotate a dramatic amount of your risk away from, you know, growth areas to value based on a rotation that may or may not have happened already. You know, more critically, back to your point, you did have synchronized growth going into 17 that was starting to pick up, and Europe was just about to go on its best growth spurt since really the pre-crisis period. It's really hard to see that now. But coming back to the U.S. economy directly, look, due to fiscal stimulus, due to you know, massive Fed intervention, you know, GDP is only 3.5% below where it was in Q4 of 19. If we get a big round of stimulus, it seems highly likely that we're going to be back to peak GDP by the end of Q2. Now, that doesn't mean we still won't have losers in the economy like airlines and lodging. But on the flip side, you know, if we can get back to peak GDP by the end of Q2, you know, that sets us up to have, you know, pretty powerful growth through the end of 2021 into 2022, which we think will be a more dominant factor in driving markets than a re-regulatory agenda or marginally higher tax rates.
Troy, we've got to leave it there. I'll ping you a message in the morning to talk markets. Great to catch up, sir. Troy Gajewski there at Skybridge. Up next on this programme, the analyst action you need to know. That'll be next in your morning calls. Then later, for this market, is it really just a blue wave or bust? We'll ask Stifel's Barry Bannister at the opening bell. This is Bloomberg.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Here are the morning calls. First up, Citi raising its alphabet price target to 2,000. The analyst citing broad-based strength in YouTube and search. Secondly, Morgan Stanley upgrading Monster Beverage to overweight. The analyst expecting a re-acceleration in domestic sales. And finally, Argus downgrading Hess to a hold. The analyst citing concerns over the company's debt and mounting losses. Three of the calls this morning. Up next on the program, the election, challenging investors, trying to find the narrative.
Ada 3 kelompok pengungsi tersebut yang sudah berpencar arah. Kemudian kami dari Polsek Banda Sakti berkoordinasi dengan perangkat desa Kampung Jomblang melakukan upaya pengumpulan secara persuasif serta minta tolong kepada warga. Alhamdulillah warga yang terpecah semuanya berkumpul.
Okay, ladies and gentlemen, I'm placing a stop on profit for Swiss franc at 0.9146. Oh, actually, no, I will wait a little bit. I will place a stop on profit 0.9148. Okay?
Electioneering series. Tune in 5 p.m. Eastern, 2 p.m. Pacific, only on Bloomberg Television.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
So here we are. Usually days like today are a little bit of a snooze. You wait, and then you wait, and then you stay up overnight, and maybe you trade. Today we have a lift, a real rally that follows through from yesterday, a real cyclical tilt to that rally too. The S&P 500 outperforming, the Nasdaq underperforming, up 0.7% on Nasdaq futures. On S&P 500 futures up 36, we advance 1%. It is election day in America. Switch up the board in the bond market. Treasuries selling off, yields are higher, the curve is steeper, up 3 basis points on a 10-year to 0.8739%. Troy Gayeski of Skybridge on the program 10 minutes ago talking about the dollar getting trashed. It's getting hit pretty badly in G10. Euro dollar 117.20, up 0.7%. And there it is. Not enough chat about this. The bounce back in crude, up a little more than 3.5% on the day. 38 handle on WTI, worth a look. A real cyclical lift to this market in the last couple of days going into the final day of voting in America. So that's the cross-asset price action. Let's get to the market desk with your movers. Here's Abigail.
John, with the underperformance for the NASDAQ on this morning, higher but up less than both the Dow and the S&P 500. Let's start there with technology. Now, Twitter today is actually getting a bid, the first time in 3 days. The last 2 days down 24%, the worst 2 days going back to July of 2018 on those disappointing earnings results. But today up 1.8%, and yesterday the company saying that it will not allow the presidential candidates to claim victory for themselves. Apple also getting a small bid, up 0.4%. However, where we have some real weakness, PayPal down 6%. They beat earnings estimates, but the revenue guidance disappointing, so that stock getting punished, and Alibaba down sharply.
Moving further, my stop on profit for Swissy to 91.46. Okay, 0.9146.
Getting a bid on that rally for oil you were talking about. Boeing, the industrial company, up 1.8%, and that is the second best sector right here on the open. The best sector, though, John, as you know, the financials up 1.9%. JP Morgan up 3.5%. This as the yield curve is steepening on election day, John.
A lift for the banks off the back of that bond market move. Abigail, thank you. About 2 minutes into this session, we advanced a little more than 1% on the S&P 500. Bottom of the pile, near bottom of the pile, is big tech. You see that reflected in the NASDAQ underperforming the S&P 500. Financials, as Abigail points out, up by 1.9%. Industrials up by 1.7%. 2 months ago, if we talked about a blue wave, I would have had guests on this program talking about how bearish that would be for this market. Over the last month or so, you talk about a blue wave and everyone is lining up to tell you how bullish it is for this equity market. Wall Street is warming up to the idea of a blue wave. Invesco's Alessio De Longo is expecting it to fuel the next leg of growth.
If indeed we get a blue wave, if we can get a material expectation for large infrastructure spending, I think that can change the equation for growth expectations in the U.S.
Let's bring in Bloomberg's Kaylee Lyons for more. Hi, Kaylee.
Hey, John. Well, I would argue the market isn't just warming up to the idea of a blue wave. It's starting largely to price it in. The thesis, of course, being, as Alessio De Longo was alluding to, that a blue wave means it will be easier to push through large-scale fiscal stimulus and, as a result, end up with stronger economic growth. And you're already seeing that reflected in the market in recent days, in that those economically sensitive cyclical sectors and small caps are outperforming, while it is tech that is lagging behind. And in the bond market, we've seen strategist after strategist call for higher yields at the longer end of the curve. In the case of a blue sweep, we are starting to see that show up, and a steepening of the curve on this election day. As we have been talking about, John, right now the spread between 5 and 30-year notes is sitting around 126 basis points. Again, the thesis being more stimulus leading to stronger growth. That's the positive end of the blue wave scenario that the market is seeing, but it would bring some negatives too, John, most notably when it comes to tax policy. Biden planning to raise the corporate tax rate to 28%, and you're already seeing fear about that show up in the market, in that when you look at a basket of higher tax stocks and a basket of lower tax stocks, those that have to pay higher taxes already have been underperforming over the course of the past month. The market really bracing itself for a potential increase in tax rates. I have to round it out here, John, though, by saying that a blue wave is far from a certainty right now. When you look at betting markets, they are pricing just over a 50% chance that it actually happens. And in the case that it doesn't, a lot of these trades that are already happening are going to have to unwind, John.
Kelly Lyons, thank you. We're doing it all over again. 4 years ago, no one knew what they were talking about, and 4 years later, just feels like no one really knows, once again, what any of these outcomes would mean for this market. Stifel's Barry Bannister weighing the potential market implications of a blue wave, writing the following, quote, "We suspect that stocks would rise sharply with a clear blue wave, but any stimulus-anticipated rapid Fed response may be a buy-the-rumor, sell-the-fact event. If the Senate or presidency stay Republican, the S&P 500 probably sells off initially as fiscal stimulus visibility fades, lifting the dollar and real yields." Barry joins us now. Barry, it's fantastic to have you on the program with us today. You're always far more nuanced than most on the different permutations and what they mean for financial markets. Barry, can you walk me through what you're looking for in the next 24 hours and what you think the outcome of the outcomes might be?
Thanks, Jonathan.
Yeah, generally speaking, Trump is better for growth stocks. That would be like tech and consumer discretionary, which of course includes Amazon. Biden would be better for value stocks. Think financials, industrials, and oddly, even energy, because the dollar would probably be debased, and that drives up oil prices. If you look at right now, though, it's very interesting, but the pure-out defensives, the equal-weighted staples, healthcare, utilities, and the level 2 industry telephones, relative to the S&P, have only been this cheap 3 times in 50 years. So the market is very uncertain at this point. But again, Trump is growth, Biden is value.
Barry, walk me through the balance of risks around that breakdown. When you look at the financials,
position closed on Swissy at 0.9146.
When do we start to process that extra nuance around the sector level story?
Yeah. Well, the nuance is really that what's different this time is that normally when you loosen up fiscal policy, you tighten monetary policy as an offset. This time you have loose monetary and loose fiscal policy, which is reflationary. If it is a blue wave, as you said, what you'd have is reflation, a weaker dollar, a steeper curve. Now, housing might slow if this curve steepens too much. You'd have a lower PE but higher EPS. And so those markets, those value markets, tend to go up, but they also go up less in terms of degree than the growth markets. The growth markets would be the opposite of all those outcomes.
Barry, a Bloomberg subscriber has written in and asked the best sector to hold through 2021. If you can answer that and also tell us how dependent that would be on the results of the next 24 hours.
Well, if it's Trump and Republican Senate, I would say that technology, this is particularly these fan mag stocks,